All right, Mark Perlberg, CPA, here to talk to you about the 5 most common missed deductions that I see for real estate investors. Number 5, repairs. We often see for some of the new investors that they do not know how to record their general expenses and their repairs. So they may have significant repairs, but they just don't make the time to record those repairs or go back and look at their bank statements, and they will miss out on crucial write-offs. Number 4, travel. A lot of DIY tax preparers do not know how to write off their travel and simply will not write it off. They don't know whether to write off the vehicle's travel based on mileage or actual vehicle deductions, and they don't know what kind of travel qualifies as deductible, so they may leave it out. Number 3, meals. Business meals can obviously be tax deductible. However, if you are preparing your own taxes or your advisor, your CPA or EA, is not giving you proper coaching, you may not know how and when to write off your meals, and you may be leaving some opportunity on the table there to reduce your taxes. Number 2, depreciation. Depreciation is one of the most important write-offs for real estate investors. You can't talk about the tax benefits of investing in real estate without talking about depreciation. Now, most tax returns show depreciation on the rental properties. However, we sometimes see, whether it's from an incompetent accountant or a self-preparer who just doesn't know any better, that depreciation will be left off the Schedule E's for when they file their returns. And that could be one of the biggest opportunities. Now, if you've missed out on depreciation for a number of years, we can go back and file a Form 3115, change in accounting methodology to get that depreciation. And we've done that from some of our clients. That's a huge opportunity that could be missed that we see on some occasions. And number 1, the most common missed deduction that we see and the most valuable missed deduction that we typically see for our clients is in insurance write-offs. So many of our clients forget that they are paying insurance on their rental properties and they just don't remember to write it off. One thing that we can do to help our clients out is we will actually find that insurance deduction by looking at their closing statements. It's because sometimes they will prepay for their insurance costs up front before purchasing the property in year 1, and then we can find those costs and plug them into their returns and make sure they capture those write-offs. But a lot of clients, they're so busy, and they often miss their insurance deduction, and we have to come back and make sure they're capturing that and maximizing their write-offs. So if you're a client listening, make sure you write off your insurance before giving us your documents for tax time, because we're sick and tired of asking for it over and over and over again. And if you're not one of our clients and you think you might find some value in learning on how to maximize your write-offs for things such as repair and travel and meals and depreciation, there's a lot that we can do on the end of coaching you up and making sure you're optimizing your write-offs and maximizing them. And there's a lot that we can do on our end to make sure that we are maximizing the way that we depreciate your business or vehicle or other types of depreciable assets. So if you think that we might be able to help you out, you can contact info@markperlbergcpa.com for a free discovery session to further explore how we may be able to serve you as your tax advisors. Hope this helps, and we'll be keeping in touch and providing more content in the future.